Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores market analysis for April 19th, 2010. Let's get right into the charts using the charts found at tradingdesk.stockscores.com. We see here a chart of the Dow 30 ETF, symbol DIA. Take out my little drawing tools here and we can see that the long-term upward trend is well intact. We are quite a bit above that upward trend line. And in the short term, we really flirted with that upward trend line. In fact, if I was here to show you a 60-minute intraday chart going back over the last 2 months, we could show that the intraday trend line was actually broken. However, on this chart, it looks like we made a nice little bounce off of it. The weakness that we saw on Friday was, of course, due to the news on Goldman Sachs, which kind of dragged the market down. The market came back very well today, and that is a sign that the buyers remain in control. So we want to watch in the short term for whether this upward trend line can stay intact, and if not, we're probably going to fall back down to that longer term upward trend line. But in the big picture, the buyers are in control here, and it's a good time to be long stocks. This is a chart of the Canadian dollar, which has seen a little bit of a pullback over the last 2 or 3 days. But when we look at the longer term chart pattern, we have a pretty bullish situation on the Canadian dollar because we have rising bottoms, the buyers are in control, and today, after starting the day weak, the Canadian dollar came back to close above its open. So I think that there is a good chance that in the short term this market will continue higher. Now, gold recently broke out of a little pennant here, and since it broke out of the pennant, it's been pulling back over the last couple of days. But I think that we could see it bounce soon and start to work back up toward those old highs. Now, a lot of this will depend on what the US dollar does, and we'll look at that in just a moment. This is a chart of the TSX Venture market, which of course is the speculative Canadian market. A lot of mining stocks on this market. It recently broke out from a pennant, and we've had maybe 6 or 7 days of weakness here, but the long-term picture for this market looks good, although don't be surprised if we see some short-term weakness before it moves higher. The chart for oil, really oil opened weak today, and it's been weak for the last few days, but what is encouraging is that oil was able to come back to close above its open after gapping down on the open, and that is a sign that we're probably going to make a little bounce right off of this line of support. Old resistance becomes support, and so you can see there that we're at that line of support. I think oil probably bounces back in the short term, but still really working on gathering that momentum for a longer term upward trend. The Nasdaq market looks healthy. The long-term upward trend is in place. Maybe a little bit too healthy. You could argue that the market is so far above its upward trend line, it is due for a pullback. You know, look at the distance there between the blue line that I've just drawn and where prices are today. But you can't argue with an upward trend. It hasn't been broken down yet. Even this little short-term trend over the last couple of weeks is still in place. And so this market looks pretty good in general. I would stay long the Nasdaq stocks. The S&P 500, again, on the very short-term chart, Friday's action broke that upward trend line. That made me cautious with the anticipation that this market could pull back to the long-term upward trend line, which is quite a ways below where we're at right now. But the market action on Monday here today was pretty good, and so we may be able to hold this shorter-term upward trend line and continue higher. Want to keep an eye on it, but Monday's action was quite encouraging and really saying that the Goldman Sachs news of some potential fraud with Goldman Sachs wasn't that big of a deal. Certainly not worth taking that much valuation out of the overall stock market. The Canadian stock market, the TSX 60, locked in a pretty narrow trading range under longer term resistance here. If it can break through this longer term resistance, this market should continue higher. Weakness in the US dollar would lead to strength in oil, strength in gold, and that would help the Canadian market make a break to the upside, and so that's something I'd be watching for here. And finally, the US dollar index has been setting up these falling tops. Now, over the last 2 or 3 days, the US dollar index has been rising, But given what happened today, where it opened up and closed quite down below its open, not necessarily down for the day, but below its open, tells me that we may be running into that short-term resistance, and that slow cycle of pessimism building in the US dollar may be causing the US dollar to roll over relative to global currencies. Well, that has been the Stockscores market analysis for April 19th, 2010. For more information on the tools and services offered by Stockscores, give us a visit at www.stockscores.com. Have a great week in the market and trade well.